Okay, folks, welcome to Market Wrap for Thursday, the 29th. I apologize that I'm not doing the live stream tonight as we normally would. I am a bit under the weather tonight, and it would not be a good show because I am deteriorating rapidly. So what I want to do tonight is I want to talk about the weekly charts, and then over the weekend with members, I want to go over the monthly charts as well as the weekly charts, and even do a deeper dive on some of the charts down to a daily view so that we can get a good feel for how we're closing out the final quarter from a very, very high level of view. And that'll give us an indication of how we might be proceeding into the new trading week, and for that matter, the year. And if you're not watching this video all the way through, which you should, I encourage you to. I wish you a very, very happy new year to you, your family, happy and healthy, and let's get to it. Okay, so today we booked some profits today on Tesla. I'll go into more detail on Tesla in a moment, but we were building a fairly sizable position. I had anticipated that we would find some support right where we had drawn our support level. It held. We added more aggressively yesterday, and today it was off to the races. So we booked half profits, and let's talk about this a little bit, the whys behind it. Why were we so aggressive with the trade? Well, when you have a mega cap trading down with RSI with a 16 handle, you don't ignore it. You take the bull by the horns and you aggressively wrestle that sucker, because it's going to be a long, long time before you see a setup like this again on Tesla. Also, the stochastics, your momentum indicator, they were flatlined. These stokes were like a coiled spring. And the counter trend rally off the lows was going to be a nightmare. And yesterday, a nice move up higher. I was concerned with the topping tail. And today, we rallied up and through and closed above the 120 mark on massive, massive volume. So the key to remember with trades like this is that you build aggressively when you see signs of historical support getting hit. You see signs of an extreme overbought stock with top quality fundamentals getting ready to head the opposite direction. Also, when I went onto Twitter, as a matter of fact, I'll even bring this up. I was on Twitter and I was going back and forth with Jake over at TrendSpider, and he put out his tweet. Now down, Tesla now down over 44% of the month. Weekly gap below at 81 to 87, acting like a magnet. And I love this little magnet here. I'm going to steal this from him. Margin calls in full effect. Long-term holders taking profits. Short-term holders taking losses before year end. So here's my reply. Loving the magnet will probably steal possible thought to credit. RSI, when I typed this out, was below 17. Ultimately, it went down as low as a 16 handle. Intraday, 4-hour time frame, we had RSI down below 14. And as I pointed out on the weekly chart a moment ago, we had a 106.96 level. Now, initially, when we tapped that support level, we cut through it like a hot knife through butter. The thing is that in the pre-market the next day, it gapped right back up and recaptured support. So I put down, I was expecting a 100 to 104 price target in the short term and a short covering rally up to the 50-day moving average. And of course, we were building long. So was I right with my 104 price target? Well, you decide. So here was Tesla in the pre-market on the 28th, and we hit a low of 104.22. So if we were playing horseshoes, I would have been right on the money, but I slightly missed my target of 104.22. So good trade. Now we still do have a long position on it. We only booked half profits on Tesla. We're looking for some more upside here. We also have a strangle and a straddle on Tesla. We have still a significant position. I had to lighten up today, though. I had to do it because it was just proper risk management to book those profits and raise capital. So members, more to come on Tesla. And congrats to those who joined in. Don't thank me. People are sending me IMs thanking me. Don't thank me. You pulled the trigger. You made the call. Congratulations on making the decision. All right, let's talk a little bit about the bond market. What's going on here? It's a good week. This is a weekly chart, the 10-year yield. We are right up and into the upper band of resistance. The question is, as we go into the new trading year, do we break out? And what happens to the market? We know that when we get a 4 handle on the 10-year yield, equities begin to buckle, and in particular, technology stocks. Now, on the day, I mentioned last night on Market Wrap that I was expecting a pause, a pullback at resistance, and with stochastics so overbought, that we would probably roll over and do one of these numbers like we did back here. Roll over, flatten out, then hook back up, and that march up higher ultimately is what, if it happens, is what's going to take the market down further. Remember, we're heading into, or we are in, a earnings recession, and rising yields only magnifies the damage to corporate earnings. The TLT, 20-year bond ETF weekly time frame, we are poised to close down below support. We may get a bit more of a rally tomorrow and possibly salvage this support level. I'll tell you, if we do manage to hold and close back above this support level, we may just be looking to sell puts on the TLT, because I think that what that might be is a higher low. Daily view. So today we held support, no continuation move lower. In fact, we put in a higher high. Obviously light volume. All these charts, with the exception of Tesla, maybe the Qs. What did the Qs do out of curiosity in terms of volume? Very light volume. You know, Tesla had high volume. That's a standout. The tips. Treasury inflation protected securities. Much like the TLT, they broke down below support. We did see a rally off the lows. I'm sure they were up today, and they were. No follow through to the downside, and we did put in a new higher high. Volume was not that bad for a holiday week. The dollar, weekly view. I think the daily chart is looking worse than the weekly chart, but the weekly chart is looking pretty bad itself, but one trading day left to go, right? It looks as though these stochastics may be getting ready to roll over. Now, last night, let's go to the daily chart. Last night, when we spoke about the dollar, it had a very strong day. It had a bullish engulfing, but today no follow through. And in fact, we made new daily lower lows in the dollar. That is pretty bearish stuff. So how do we trade this? Well, if we see a breakdown in the US dollar, we want to be long commodities, gold, silver, etc. Now the dollar versus the euro, very weak. The euro is very strong this week. Remember, the US dollar this time last year was the only country in the G7 that was raising rates. That is no longer the case. The yen, it's still down on the week, but still a fairly bullish week. You know, all down weeks are not equal. The fact that we were lower and rallied, we're just slightly lower on the week, is pretty good. So again, one trading day left to go, and this could easily turn positive by the end of business tomorrow. The volatility index, weekly view. We're still up on the week. This cannot be ignored. We are off the highs of the week, daily view. A pretty bearish day today. We held support. RSI is rolling over, rounding top down below 50. The Dow transports, they had broken down last week on a weekly time frame. And I'll be honest with you, many of these charts last night when we were looking at them, I never would have guessed that we were going to have a rally that we did today because they were so bearish. And in fact, case in point, the Dow transports yesterday, a very bearish candlestick, another lower high, but no follow through to the downside. So today, while it's a good day, keep in mind, no breakout, right? We do not want to get all too excited about today's rally. It came on very thin volume. That's the thing with these quote unquote Santa Claus rallies, is that they come on light volume. It's very easy to manipulate the markets. So don't consider this type of price action indicative of what we're going to see the first week, second week of January. The Dow Jones weekly view, we're up on the week as we were last week. Volume obviously very light, not much to talk about there. That's expected. Daily view. Now the daily view yesterday was horrible, horrible. Today they gapped it up. To me, this is just algorithmic trading. They took the upgrade of Tesla, Netflix received, I believe, 2 upgrades today. So they took those upgrades, the computers went to work, and gapped the market up higher. But remember, no breakout here, so we can't get too excited. The key going into 2023 is the L word, and that L word is liquidity. You got to have your liquidity. That way you can take advantage of opportunities, which is exactly what we did with the Tesla trade. S&P 500 weekly view, up spot 1.4%. We're right in the middle of the trading range, weekly time frame. daily view. Very similar to the Dow Jones in that they gapped it up higher on very light volume. You know, it's a good trading day today. I'm not going to read much more into it until we get into the new trading year. The players are back from Stad and Aspen, and the algorithms are no longer programmed to keep the markets in check. The Qs, weekly view. Not a bad looking week, to be honest with you. Yes, we're down on the week, but all down weeks are not made equal. Right? We're well off the lows of the week. Down about 1/3 of a percentage point, daily view. Again, very similar to S&P 500, the Dow Jones, in that they gapped it up higher, light volume. I want to be more bullish here. I don't want to be the doom and gloomer, but I have to say it like I see it. For all I know, next week we're going to new all-time highs next week, but we want to not trade this market with rose-colored glasses. The banks are up on the week by about a percentage point. Why? Yields are up, along with the S&P. Obviously, light volume. How do we do today? RSI looking good. It's back above the 50 mark. Stokes rising with higher lows. Paused at resistance. Not a bad chart, but again, volume is so light. I'm not going to keep repeating myself about volume. Volume skews the price action. Technology. We're now up on the week. One thing I want to point out, folks, on these weekly charts, and I haven't done so to this point, is that keep an eye on your moving averages on a weekly time frame. They are really picking up steam. We have the 20 period in green, dotted green, the 50 period in blue, and the 200 period down here in red. So as these averages begin to pick up steam and threaten the 200 period moving average, the markets get wonky. Technicians like me, they're going to step aside. They're probably looking to short the market more so than buy it, because these averages act as declining ceilings. The semiconductor sector, an up week, a solid week. I'm sure volume is going to be light, volume light. Yep, let's go to a daily view. Up over 3.25%. All these charts look very typical. They gapped the market up. The one thing different here, I must say, volume is above average today on the semis. LABU, weekly chart. We are long of the LABU for full disclosure, up 4.4%. I'm loving this cup with handle on RSI. Loving the Stokes, now hooking up. We are now positive on the week. Volume above average, an abbreviated week, daily view. Strong day. We couldn't close above 7, but we'll take it. Look at the volume today. Wow, beautiful volume. So these are tells. These are signals by the market that if we fail to not pay attention to, we could lose out on some real serious opportunities. So we may be looking to add long LABU. Consumer discretionaries down week. Excuse me, these are staples. My apologies, staples. But yet they are still holding the breakout point. I mentioned last night that it appeared as though they were coming for the generals. They were coming for leadership groups that had not succumbed to the selling, meaning energy, staples. But those sectors began to break yesterday. How'd they do on the day? An up day, but this is not a chart that is bullish at all. This is a bear flag setup. I think that the path of least resistance is probably lower on consumer staples. And my logic here, besides technical, is that it looks as though you have some money going into technology, which has been beaten up, and coming out of energy, staples, etc. So it looks like there's some money getting put to work in the high beta risk names. Speaking of discretionary, they are up on the week. Think about this. Discretionary, which has been probably one of the weakest groups out there, if not the weakest group, which is also broken down below the June and October lows, is up on the week, while the leading sector, the staples, is down on the week. That is a little bit of a sign of potential short-term sector rotation. One thing that is very alarming here is that these moving averages have begun to do a negative crossover. The 20 period crossed down below the 200 period a couple of weeks ago. Look at the damage that's been done. Now, emerging markets, one of my favorite sectors going into the new trading year, assuming that the US dollar tanks, is emerging markets ex-China. Now, China was up big today, so I'm sure the EEM and the EDC were up significantly higher than EMXC. That's okay. I don't want the China risk. I'll forego a couple of extra percentage points in return to avoid a potential 30% haircut should China attack Taiwan, and all of a sudden their stocks are worthless on our stock exchanges and your ETF gets a 30% haircut. because they all have Chinese stocks. EDC and EEM hold 30% China. So this is looking good. Weekly time frame, daily view, up nearly 1.25%. We'll take it, and we're going to be looking to add more here. Energy. Energy is weak to me. We're short of energy now, the XLE. We may, just may, have a double top. Now, if we break out and close above this upper band of resistance in blue, well, we're wrong on our short thesis, and we'll have to get out. But this is why it pays to wait for a stock, an ETF, whatever you're trading, to rally up and into resistance, and that resistance level is immediately your stop loss point. Now, we were short of XLE back here, and we booked profits, and now we're looking to, well, actually, we are short again, not looking to. And we may be looking to add more. Daily view. Now, what I was looking for today was whether or not the XLE would close above this resistance level here at around 87 bucks a share. It did not. It failed. Good for us. That doesn't mean it can't recapture tomorrow, and we may consider stopping out of the trade. But right now, we're viewing this as still a breakout point failure, meaning we broke out here on the 27th, failed to hold it yesterday, the 28th, today, an attempt to recapture, and it was rejected. Oil. Another reason why we are short of energy is that oil is weakening up on a weekly time frame and on a daily time frame. 3 consecutive down days to be fair. We did rally off the lows of each session the past 2 days, but they couldn't push it positive. So I'm going to remain in the skeptical camp. I'm not going to say bear camp. I'm not going to say bull camp. I'm going to say skeptical of this rally. And if oil goes, so goes energy. Gold up 1.21% on the week. These topping tails are driving me crazy at 1850. That's resistance. We close above 1850, folks. We spend a week or two above there. Look out above. Daily view. RSI looking good, like a coiled spring. Stokes improving. And we broke out again today on a daily time frame, recapturing 1820. Volume was light. Now for our gold mining stocks on the week, GDXJ down a 0.5 percentage point. Still have some topping action here, but on the daily time frame, up nearly 0.75 percentage point. And inside day, and what we're looking at here is the exact opposite of what we're seeing on the major averages, where you have the moving averages going in the wrong direction on the Dow Jones, S&P 500, small caps, etc. They're going in the right direction on precious metals, meaning they're rising. They're crossing above the 200-period moving average. This is why we are long. Nugget, weekly view, down just about 0.75 percentage point. Again, more topping action here. I would not condone buying right now. Daily chart. We had a breakdown on RSI yesterday. We were unable to recapture today. Stokes, I put this rounding top above it in blue to remind me that this gives me the willies in that the stochastics, a momentum indicator, may be poised to roll over, or maybe not. But we keep these up here, these annotations, to look back and say, okay, were we right? Were our calls accurate? Silver, strong week, up nearly 1.5% on the week. Daily view, strong day today. This is a leveraged ETF, folks. Up over 3.75%. We'll take that. Really good day today. Really, really good day today. The silver miners, of which we are long, down over 0.75% on the week. Daily view, a down day today. They did not perform with their peer groups. Uranium, positive on the week. Weekly consolidation, looking really good here. Stokes are hooking up. Daily view, an inside bar today. We'll take it. In fact, we need to modify this chart to give it some proper respect. And there you go. We have clear and defined upper and lower bands of support and resistance. We could do this in all actuality. Put another one up here. And there we go. There's our resistance levels. So uranium looking good, up over 1.5% on the day. Oil, we have a naked puts at the 15th strike, and we are right there. What do we close today? 18.45. We may look to add more here because on a daily chart, I got to say, I'm getting bullish here. We may even buy some of the common or In fact, we can't buy the common because I stopped out up here of the common. It hasn't been 30 days yet. So I may put on a call spread, meaning buying a deep in the money, call option, selling a deep out of the money, call option, and that helps finance the trade. That'll put us long, and we still get our tax write-off for the stop loss that we took or we had executed on our common shares. And that is it for tonight, folks. Everybody have an awesome, awesome new year. Let's hope this clown world gains some sanity in 2023. And I look forward to trading with you another year. As many thank yous as I get and kind comments, I have to say the value I get out of working with you folks is just extremely enriching, fulfilling, and believe me, you do a lot more for me than I do for you. So thank you, and have an awesome, awesome New Year's. Be well.